You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it's time once again to begin the epic journey through the world of options. That is the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever exciting, at least we hope so around here, Options Insider Radio Network. If you're saying to yourself, what is going on? Why am I hearing that music on a Wednesday, let alone at 11 a.m. Central, 12 p.m. Eastern? Mind-blowing, worlds colliding, dogs and cats living together, mass hysteria. Don't worry, you're not going crazy. We are coming at you at a very special bat time and bat channel this week. We warned you last week, so you had a little bit of a heads up. But if you are surprised, we are joining you a different time today because we're on the road. Well, at least not me, not Uncle Mike, or not Mr. I should say the Rock Lobster. But Uncle Mike is on the road doing his tour of academia. So we thought we'd want to accommodate him and also bring in some folks there from where he is speaking to join us here live on the show. So let's get right to it. Mr. Uncle Mike, sir, where are you and what are you up to today?
We are broadcasting live from the Duke Fuqua School of Business. We are excited to be here. Let's hear it, everybody. Yeah!
Oh, a very boisterous crowd. And what is it that brings you?
Can't wait to hear this show.
What is it that brings you down to Duke University today, sir?
I was doing spoke with some graduate students a little while ago on the future of the business, that type of thing, and doing a presentation tonight on covered calls and portfolio protection with put options.
Are you telling them how to pay for puts again? Is that what you're doing down there?
Well, you know.
That is kind of your MO. Ironically, you're only the first of 2 people who are going to be beaming in from the Carolinas region to the network today. How strange. Also with a hurricane bearing down on you guys. So inauspicious timing, I guess, to say the least. But we're looking forward to hearing more about what you guys are up to, what you're seeing down there in a little bit. First, let me go farther up the coast, all the way to the hinterlands of Maine, where we are joined by none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome to the show, sir. How are things in the hinterlands of Maine?
Sunny, 75. I'm I'm tempted to dip my toe in the water. If I didn't split my thumb open, I would give it a try. But that would make me scream in agonizing pain when the salt water hit it.
So that would not be advisable. But you're up the coast. Hopefully you're insulated, at least for the time being, from all the winds and the rain that are going on down south. Meanwhile, we're going to go on right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You guys know the drill. This is the portion of the show where we break down what the heck is trading, what is lighting up our individual and our collective tapes here, what is going on in the broad market. If you're looking at the screens right now at this special time of a little bit past 11 a.m. Central here on Wednesday, the 10th of October, you'll see a lot of red on your screen. Most of the major indices well into the dark side here. S&P off nearly 1.5%, or pushing 40 handles there. The Dow about 1.3%. The tech-heavy NASDAQ off over 2%, about 2.2% right now. All that red in the broad market means green on the old volatility screen to the tune of VIX cash north of the 18 handle. Yes, you heard me right, listeners. North of the 18 handle. Last time we got together here on the show, actually because there was a holiday no show on Monday, it's been a little while. It was quite a different story out there in VIX land. Spoiler alert, things not looking good for my crystal ball prediction on Friday. We got a couple more days for things to get back in line. Looking at it right around 18.5 right now in VIX land. Got as high, nearly a handle higher than that, up to nearly 1940 in VIX cash. All this on the heels of a bunch of concerns, not the least of which being that aforementioned hurricane I discussed earlier, kind of bearing down and bringing a lot of wind and rain and storm surge and everything else to the panhandle of Florida, and then going to continue right across the coast into Georgia and beyond in that region. So that type of thing tends to weigh on the market in sessions like this. But you know where they're not concerned about such things? Down there in Duke University, where it sounds like they're having a good old time. Mr. Uncle Mike, sir, when you're not busy regaling the grad students with the latest from the world of options, what is catching your eye? And maybe if you want to take a poll of the room, what is catching their collective eyes in the marketplace these days?
Sorry, just a mute button issue. I'll go through what's catching my eye, and then if anyone else does want to come chime in on the show, the floor is yours. If you'd like to come on down here to discuss anything that's catching your eye in the marketplace. I think a couple things are happening right now. And number one, like you had mentioned, we have whenever there is a tropical storm or something that's hitting the coast of the United States, it is going to weigh on the markets in some way, shape, or form. We also have potential interest rate worries. Will they, won't they? What does market neutral mean? Of course, we have trade worries as well. So there's a lot of things with which to be worried about. What's catching my eye for the most part is the fact that we're actually having a little bit of a pullback. Pullbacks are healthy for the market. The thing that I want to remind everybody of is that we are roughly 3.5% off the all-time high that we did make a couple weeks ago. So that is something with which to keep in mind. The other thing to keep in mind is that it looks like it's leading us downward the most is the tech sector. XLK, for example, it's down almost 3% on the day. So that is one of the bigger ones that is leading us downward. And I've always said on the show for, over 700 episodes now, large rallies begot large pullbacks. And we are in a pullback right now, I believe. I don't think it's anything to be hugely fearful of by any means, but 3.5%, that's healthy in the market, especially when it's off the all-time high. So with that, we're going to leave that as our representation of what we are seeing in the marketplace right now, but I'm sure we'll have some participation for questions a little bit later on.
Yeah, start polling the crowd for some questions. Maybe if you want to even write them down ahead of time, so you could read them into. If they want to shout them into the thing, they can too. As long as we can hear them, that's fine. Yeah, start polling the crew. Start winding them up. If they have a bunch, we could even do an extended listener mail segment today. So get them riled up over there, Uncle Mike, while I beam back up to the hinterlands of Maine. Mr. Rock Lobster, I'm not sure if you saw it, but some things are happening in the volatility space. I'm not sure if you're aware. I know you're very busy with your cut thumb and whatnot up there in the land of Maine, but we are, I think the technical term is we're in zone 75 right now in VIX. Is that correct?
You're close. You're 72 handles off in the zone.
Oh, so close. Next week I'm gonna hit it for sure.
You'll get it nailed. Actually, right now I'm just discussing with Mark. We are closing stuff. My vol newsletter, closing upside call spreads, unwinding some flies for our fund, looking at new stuff to do, short some time spreads in the indexes, all kinds of goodies to do when the vol is ripping. So it is a little like a kid in a candy store today, I have to admit. So yeah, vol is higher. And again, do you remember several times on this show that we've talked like, the dark side of the force has yet to reveal itself. Now, Tusa was just saying, we've got vol's going up, but today's actually the first day that I'd say we had realized vol. And if I had to pull anybody in the crowd, what's the 10-day realized vol for the SPX on the open today? Somebody, anybody? Any guesses?
You're throwing these poor kids under the bus.
Yeah, of course. That's what I do. I throw unsuspecting people under the bus because I get thrown under the bus all the time on this show.
You do.
So, realized vol for the S&P 500 for the last 10 days on the opening this morning before we gapped was less than 6%, which is pretty damn low for a closing 16 VIX, if I do say so myself. So, the why the vol is up there, don't know. And like one of my vol rules is, if you don't know why the vol is moving like it's moving, as in volatility outpacing actually how the market's moving, you've got to be careful. You can't like, the vol's up, I'm just going to sell it, everything's going to be great. Because volatility is a strange thing that when traders really don't know what's going on, they just pump the price up. And as Mr. Longo knows, you don't know what's going on, just charge more for it, right? How are those calls? I don't know. I'll charge you a ton of money, and then they go buy it, and you go, oh my gosh, now I'm in trouble. I better charge a whole bunch more the next time. So that's how volatility works, and that's what's happening now. So we got a pretty constant bid for vol since last week. The VIX futures have been up 5 straight days, I think. Today's day 6. So with the level of activity we had, that's not normal. So I don't know if everybody – so there's interest rate issues. Maybe we stepped up the trade rhetoric with China. I don't know what – all these are all little things, and they just add up to uncertainty. And, of course, I think Tusa did say it last week. Never has there been a better time in the history of the market either to sell the Qs or the SPX. And that's where we are. So I still don't think this VIX level is over because we don't have clear resolution. We don't have a clear reason why it's this high. Like, okay, it's rates. We're all a little freaked out. But for the most part, the economic news is good. And as Mr. Tusa says, in every bull market, there are pullbacks. And how long and how deep this one goes, I have no friggin' idea. But as long as I can close positions, I'm a happy boy. So there I am. Today, I'm a happy boy.
Vol is moving far south when I'm getting filled on crazy legacy, far out of the money stub quotes that I put in things like VXX puts months ago that I wasn't even thinking about. And I was like, oh, yeah, I put that in there, didn't I? They're so far out of the money, I had never thought. I'm getting filled on those. People are scrambling to oblige me and give me very, very cheap downside on some products. So things are moving low when those bad boys are getting filled. Uncle Mike, I'll give you a little bit of a thought question for the folks down there at Duke. We put a little flash poll up there before the show. We're going to get to some of our audience results in a little bit, but I'll let them ponder this as we're keeping on with the show here. Our flash poll right now just went live before the show, so if you haven't voted, head on over to @options over there on the old Twitter machine to make your voice heard. And it's kind of along the lines of what the Rock Lobster was just talking about. We said, VIX is soaring, VIX about 18.5. Our old friend VVIX, we didn't get to VVIX, which is, of course, the volatility of VIX, which shows things are rocking and rolling. When it gets north of 100, when it gets into the triple digits, things tend to be moving. Right now, we're at 120, so things are definitely moving. So if you didn't believe your eyes with the movement of VIX itself, you could look at VVIX and say, things are actually happening out there. So we're asking you guys quite simply, is this the new normal, or is this maybe a quick blip? Are you betting on a little bit of inversion or reversion, I should say, out there in the near term? So we thought we'd put that to the test really quickly. Let's just say this week, where do you think, really quick, easy question this week, Where do you think VIX cash is going to close on Friday? So you got a couple more sessions out there. Gave you 4 choices right in this range, in the 18 to 19.5 range where it is right now. A bit higher, so north of 19.5. Is it going to close out a little bit lower? So in the 16 to 18 range or so, right around there. Gave you a nice wide one on that one. So that's a sweet spot there. And then, or just going really low again back, it was there this morning, so isn't that crazy low? South of 16. So we gave you 4 choices. Uncle Mike, let that one percolate in their brains down there. Maybe we'll get to their answers as well as our own in a little bit. Meanwhile, here, let's hit on some other numbers that are lighting up our collective tape. It is our first, pretty much one of our first shows back since the beginning of the month, since all the holidays and our crazy schedule here. So we haven't had a chance till now to really break down the numbers for the month of September from an overall options perspective. And actually, surprise, surprise, it's been a pretty good year so far. In September, keeping up that trend, our friends over there, the OCC, aka the Options Clearing Corp, releasing the numbers for September. Overall, total cleared volume at OCC up nearly 19%. That's year to date, 18.6%. Let's drill down a little bit. They clear a bunch of stuff over there at OCC. They have stock loans, all the other stuff. But let's just skip all that. Let's dive right down to where we like, which is, of course, the listed options volume, which is our bread and butter, hitting 358.5 million contracts in September. That's up 10.3% from September of last year. Equity options drilling down a little bit further, hitting a total of 322.5 million contracts. That's up 14.3% from September of last year. Let's drill down the rabbit hole a little bit further. Let's go to cleared ETF options. That hit almost 117 million contracts. That's a 4.6% decrease. So ETF options and index continue to be the dark spot there. And then index options, spoiler alert, down 16.2% this past month. 36 million pretty much even contracts in September. Year-to-date ADV, they're quick to point out, though, is still up 9.1% in September. A lot of that still due to the strong boost everything got from a volume perspective back in the VIX easier for me to say, VIX apocalypse, let's just say that, out there in February. And of course, the futures, which used to be primarily VIX, now includes a little bit of Bitcoin as well, courtesy of our friends over there at the SIBO. The futures are still kind of taking a bath this year. Even with the addition of the Bitcoin contract, they're still down 38.8% from a year ago. So futures continue to be one of the dark spots out there in terms of the volume over there this year. So VIX really in February really gave a lift to all things options this year. The futures side obviously they saw that as a little bit of an inverse when all these products like XIV melted down. The demand for a lot of VIX futures and other related products out there kind of fell off a little bit, so we're still seeing that playing out in the marketplace. If you're wondering where are all these contracts going up, who's doing the lion's share of it? Well, it's kind of hard to break it down these days because the industry is kind of owned by a handful of conglomerates. You got NASDAQ, you got the NYSE, ICE Group, you got MIAX, you got SIBO and BOX. Spoiler alert, it's not BOX, they did 2.11%. The big dog is still the SIBO, but they're less than a quarter of the overall volume these days, 23.7%. In September of this year. That's down even from almost 28.5% this time in September. But if you add up all the things that they own, which means they bought BATS, they have C2, they have the EdgeX, which came through BATS as well. So they bought a couple of exchanges recently. If you add all that up together, then the SIBO group does about 37%. So they're still number one. And then we've got a NASDAQ group, which owns 6 exchanges. There's NASDAQ, ISE, Gemini, Philly, a couple others thrown in there that are due de minimis volume. They were about 35.25% coming in at number 2. Then you got NYSE group with ARCA and Amex doing about nearly 17%. And then MIAX, 8.5% actually from MIAX. That's not bad. And then 2% for BOX. If you're wondering where all that stuff's going up, that is where it's going up. Mr. Rock Lobster or Mr. Uncle Mike or Mr. Uncle Mike's group there. Any comments or questions on the numbers, or maybe something else leap into your mind before we dive into a little odd block action?
Well, I think from what I'm looking at and what you're saying, the futures do actually surprise me a little bit that we had a decrease in volume. What's not surprising is that we had the increase in the equity. Just a wise man from Maine once told me that options do love a bull market. But I am a little bit surprised that we're having a drop in the futures volume, especially with the addition of Bitcoin. Yes, it's been really awful, but there's been chances for people to short it, and I would think that would add a little bit more of an impact on the volume.
Yeah, it seems like it has, and that trend does not seem to be reversing itself anytime soon. Speaking of reversing themselves, the market continues to reverse itself here. So let's dive into some action that is catching our eye here with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get a little weird. So the people out there in North Carolina may want to cover their ears over there, because we're going to get into the dark side, the dark alleys of the world of options. Doesn't get any weirder these days than a name. It begins with T, Mr. Rock Lobster, ends with A. You may be familiar. I think it's a German name. Tesla. Are you familiar with this name?
Well, I'm familiar with the fact there's puts. There's a lot of puts that trade on them.
Yeah, I think they make sausage. I think they're a German sausage maker. Apparently, people are
a
robust.
German sausage maker. I like that.
You know,
Tesla.
I got a few in the old back pocket every now and then. You never know. You never know when a gem's gonna come out here. Let's see. Speaking of gems, Tesla would not be defined as one today. Taking it on the chin, off nearly 3%, hovering right around the 250 level, 255 right now, off about 7.5 handles. This one, let's see how it's doing on the old tape here. It averages about 250,000 contracts a day. Not quite half of that on the tape right now, about 120,000. So it seems like probably on pace from an ADV perspective. No big shakes out there. Overall volume, puts or calls leading the way, kind of 1-to-1 for each. But you know what we like to look at when we look at all things Tesla. We look at our old friends, the mystery puts, the funky puts, used to be a lot farther, out of the money puts, a little bit closer now. If you've been listening for a while, listeners, you know that we kind of discovered these almost haphazardly. We like to scan the market for all sorts of fun, various things. That's what this whole segment is about. And over a year ago now, probably close to a year and a half ago, we hit upon this crazy thing that the biggest open position in Tesla options wasn't a front month or near-term out-of-the-money call or anything like that. Something you might rationally assume, near out-of-the-money put, something like that. No, it was, at the time, several years out, by a year and a half and change out, closer, 2 years out, puts, far out of the money puts, which kind of caught our interest. So we've been kind of following them and keeping an eye on them every show or so and seeing what's going on and seeing if they're lighting it up. In fact, Mr. Rock Lobster, you'll like this. I don't know if I know you know our friends over there at Trade Alert, Mr. Schwartz and his team over there. They're such big fans of our ongoing Tesla recaps that in their new version of Trade Alert, they actually built us a cool little tool. They call it the Tesla downside. I hit that button and it finds all the Tesla puts for me. How cool is that?
That is cool. We need to do a show with his Trade Alert. I think we should do like 2 days a week. I should do it. And a crazy, unusual.
Yeah,
activity.
they should come on the show on a regular basis. An hour of just craziness. But they love the shows, and they're always, when they listen, they hear us do fun stuff. They tend to build that kind of. They actually have an odd block search in there as well. I can hit that button and find some odd block. Spoiler alert: I may have done that today because we're kind of doing a show at a funky time. So all sorts of fun things they built in their new versions. I think we're the guinea pigs for the new version there. It's coming along. So if you use Trade Alert to check it out, or maybe the What's Trading version over there for the retail side, some new cool functionality. We get to test the bleeding edge here. So you guys get all the cool stuff when it comes out. Speaking of cool stuff, let's see what's lighting it up here on the old mystery put front. Our friends, the Jan 2019 50 puts, doing pretty decent volume today, Mr. Rock Lobster. About 400 and change on the tape today, 437 to be precise. If you're saying to yourself, what are these things going for these days? They're trading for about $1.40 right now. So, if you've been listening to the show for a while, these things have been all over the place. 30 to 50 cents up to nearly $3. Now they're a little bit shy of half of that, right around $1.40 or so. 76, almost 77,000 open on the tape right now. So they continue to be the dominant position out here in Tesla land. And with the stock at 250, the 50 strike isn't looking as insane as it may have looked a little while ago. But almost 1,000 of the par puts, the 100 puts hitting the tape as well. Worth noting, 43,000 of those as well. And if that's not far enough out of the money for you, the 10 puts lighting it up to the tune of 200. Nearly 34,000 of those on the tape these days as well. Let's go out to our other favorite stomping ground out here in Tesla, which is Jan 2020, a little bit farther out, a little bit calmer, saner heads prevailing out here. And what do we got here? We got the 50 puts doing about 50 of those as well, 26,000 and change on the tape out there. Those are trading for about 575 or so out there, in case you're wondering, in case you're intrigued by the 50 puts out here in Jan 2020. The 20 puts also lighting it up to the tune of 200 with about 20,000 open there. So in case you're wondering, those are the Jan 2020 20 puts. Say that 5 times fast. And that's not far enough out for the 10 puts, also lighting it up in 2020 to the tune of about $1.50 hitting the tape. Those are trading 70 odd cents for 7,000 open on that strike. So Tesla doing some weird stuff. Speaking of weird stuff, if you want to find some weird stuff and you say to yourself, Self, where do I find these weird things? And you are using the aforementioned platform from Mr. Schwartz and his team at Trade Alert, go down, scroll down. Maybe you can see the cool functionality they built for us called the Odd Block. Click on that button, and lo and behold, it'll find you some cool stuff just like this. Let's move on to our second victim here. If you're Tesla, we've got, I think this is a newcomer to the old Odd Block segment. This is GLUU Mobile Inc. Ticker symbol GLUU, G-L-U-U. Trading today, $5.83, off about half a buck, or nearly 7%. So not a great day for GLUU. This one does about 2,400 contracts a day. Today doing about 5,000, 5,500. So already over 2x their ADV. If you can't figure it out from the name, they make a portfolio of mobile games. Let's see, including Contract Killer, Cooking Dash, and Deer Hunter. So all sorts of weird stuff on the mobile platform for these guys. But of course, let's look here really quickly. Let's see, about 2,400, like I said, on the tape, 5,500. Calls outpacing puts today, about 14-1. And that's where our Eye of Sauron was drawn today. All the way out to the Nove 5 calls. Someone's coming in, Mr. Rock Lobster. Looks like they're coming in to do maybe a little bit of overwriting here, which is interesting on a strike that's pretty meaty. A strike that's pretty in the money right now. The Nove 5 calls, so these are nearly $1 in the money, listeners, trading 5,000 in one big block today. 5,000 for 95 cents. Looks like paper not quite hitting the bid. The market at the time was 85 at $1.10. They came in at 95 cents, so about a dime off the bid. But it still looks like it was indeed probably a no OI to speak of, so it's all opening paper. They do have earnings on the 1st, so this will include an earnings cycle in this, which makes it doubly interesting out here, writing an in-the-money call. Let's go out here to a chart and see what's been up in GLUU over the past year or so. This name exactly a year ago was trading a bit shy of where it is right now, about $3.60. It got as high as just about a month and change ago in August, trading $7.60. So this thing has been all over the place. It's more than doubled over the course of the past year, and then of course gave up a lot of that just in the last week or so. On October 4th, it was trading $7.50. So it's off nearly $2 from then. Obviously, the news not good out here. Mr. Rock Lobster, looks like someone is not expecting an aggressive pop to the upside here anytime soon. What are your thoughts on this? Are you thinking this is an overwrite as well? And then B, as the risk manager, not only a mentor for option people out there, but also the risk manager for a fund out there. What are your thoughts on size writing of meaty in the money calls, sir?
My first thing, and then maybe, by the way, Tusa did pull his group on Tesla. Nobody in there thinks they're going to go bankrupt in 2 years, unless you said that already and I'm just asleep.
Well, there you go. Yes, I see that now. Well done, Uncle Mike.
Now, the thing is, here's the thing. It's one thing to think you're not going to go bankrupt, but will the equity price stay where it is? So if you're trading options, the fact that it might not go, probably not. Somebody I'm sure will come in and swoop whatever it is. But what's the equity going to be worth in 2 years? So that's a tougher question. Tusa, give him a hard question, not an easy question, for crying out loud. What kind of a mentor are you? Anyway, so GLUU. My other thing is, why sell a call with a nickel and juice in it? Riddle me that, Mr. Longo. Why do that?
Well, I'm guessing, off the top of my head, maybe, so let's look at the stock volume here. I'm guessing the stock not exactly lighting it up, but it'll average 2 million contracts a day. So if you wanted to sell some shares, you could get it off. Still, that's a good chunk of shares in one clip. So, oftentimes the options market can provide liquidity that maybe is hard to find in the stock market. Maybe it's a combination of both. You want to get some deltas here. So, because this is clearly deltas. This is a very deep in the money call, right? So if you don't want some deltas, you're not going to a deep in the money call. Let's see what the exact delta on this is right now. It's at 81 right now, Mr. Rock Lobster. So yeah, you're getting some meat on these bones here. Are you guys in the money call writers over there? In fact, I think we just talked about this. We had a listener question a week or so ago. Why the hell would you ever write it in the money call? I think the guy asked. It seems like a waste of time. And here's this guy doing 5,000 of a big waste of time, sir.
Well, it is a premium generator for people that are like, okay, I think the stock is done. I'll just sell the call and I'll buy it back later and keep my equity. So people do that when you don't want to sell the stock, but you want to have some protection, for the underlying. So you can do that as a strategy, but usually you have a little bit more meat on the bone to get some premium over parity and generate some sort of decay for yourself, some sort of juice. But right now this only looked like 10 cents over. I mean, 10 cents is not a lot, but maybe depends on where they bought the stock. They just want to lock it in, so they get it taken out and they're happy. So yeah, it doesn't look very appetizing to me. I'd rather have sold the 6 call for 40 cents, I think. But that's not, it's only giving you as half as much as protection, or only 40% of the protection. So I think there was a better choice of a call to sell to get juice, but who knows what the person's needs were. Their need might be different than my need.
Yes, their needs sound like they need to get short some deltas, or at least hedge some deltas pretty darn quick. I'm guessing they don't have a robust outlook for the Nova earnings, but hey, you never know. You're right. Those puts are a dime at 20 cents, and they might have been able to do better if they worked the put offer a little bit, as opposed to just crushing the offer on the calls. A dime, yeah, you're right. They might as well just hit the bid there. They could have done better. They could have tried at least. Maybe go over 15 cents. What the heck, live to fight another day with that extra nickel. Either way, yeah, you're right. Not a huge fan of that. Uncle Mike, seems like your listeners or your cohorts there in North Carolina aren't buying what the market is selling them with Tesla going under anytime soon. So apparently they're not the ones out there. We were wondering who the mystery person is slinging these puts. Sounds like it isn't those students over there in North Carolina. And then B, I know we talked about this a little bit a week ago or when that listener wrote in. But if you have any thoughts on this methodology of just dumping a bunch of in-the-money calls, maybe in lieu of or perhaps in conjunction with some stock?
Well, a couple things. What might be the case, we may have some people from the Duke Endowment Fund in here, and they might be long all those puts, and they might just say that they're not doing it, so that way no one knows that they're actually the ones that are that have bought all those
savvy
puts.
Bunch they are.
Yeah, that might be it too. But overall, no one thinks, at least from the poll that we have, no one thinks that Tesla's going belly up. But in terms of in-the-money covered calls, so I've done them at times, but I think that the first thing that needs to be mentioned, I think, is that a covered call, if you're looking to use it as a form of protection, it's a Band-Aid. Meaning a covered call is an income trade. It's not a protection trade unless you consider a Band-Aid protection. So for example, in this instance, if the stock were to go from, let's say Andrew did the 6 call, and if the stock went from 584, I believe it was, to 520, well, that's kind of a paper cut in a lot of ways. And the 40 cents helps that paper cut to kind of ease the sting on the way down. But if the stock goes to $2 a share, that 40 cents really doesn't help him that much. So a covered call, well, it can be a great income trade. If you're using it as a form of protection in case you're trying to hedge downside, it does hedge to a point, but it's a Band-Aid. And a Band-Aid is not going to help a severed jugular. And if the stock goes from 584 down to $2 a share, well, that 40 cents that you got in your covered call premium is not going to help much. So with that in mind, I'm with Andrew in that if you want to sell an in-the-money covered call, usually the times that I've done it have been if the stock has increased in value and I want to get a little bit of income on it, and I'm not seeing a lot more upside to it, but if the stock did go back down below, in this instance, $5, let's say I wanted to buy it, and I know nothing about this stock that you just mentioned, but let's say I wanted to buy it, if it did go back down to $4.85, then the in-the-money covered call would be a great trade because you're getting some income on it, you're getting protection down to the level you want to buy it at anyway for the most part. But other than that, it's like we talked about last week on the show with synthetics. to save commission, I typically prefer as an opening move to just sell an out-of-the-money put option at the same strike.
Uncle Mike, you're surrounded by young and impressionable ears. You're talking about severed jugulars over there. What are you doing? You're going to get us kicked out of Duke University there with your graphic options imagery, sir. Who'd have thunk it'd be you?
We talk about naked straddles today too.
Oh no, I guess we'll have to table that discussion for another day. Let's hit one more here in the old odd block. Then we can get to Uncle Mike. If you want to do some strategy, you can. But I would, if you're, we got a bunch of questions people send us as well, of course, and of course. If your cohorts there, A, have any thoughts on our VIX poll, and then B, if they have any questions of their own. So they are joining us live. I'll give them pride of place if they have some. Tell them to start collecting their thoughts while we run through here our final victim here in the odd block. Again, courtesy of our friends over there with the Flowmaster. Just shot this one to me. Actually, as we're doing it here, courtesy of that odd block scan. So our Eye of Sauron, constantly scanning. And this one just hit the tape, so new it's not even up on my other screen here yet. This is up here in Delta Airlines, ticker symbol DAL, trading today $49.92, off about $1 or about 2%. Out here. Delta, of course, does some paper, does about 20,000 contracts and change a day. Today already about 27, almost 28,000 on the tape. About 1.5 to 1 calls over puts. A good chunk of that right now, actually that doesn't even include what I'm just about to talk about. And a big block of 6,700 just went up of the Nove 52 half calls. Looks like paper deciding to get themselves a little bit of call love. Lifting offers are quite close to it. A penny off the offer here. 6,732 times for $1.15. This is all opening. The OI on the strike is only 1,274 contracts. This is clearly the strike du jour today. Previous to this, about 2,000 were on the tape there going up. So it's an active strike that I'm seeing these contracts hitting my tape right now. It's refreshing as we speak. 4,400, 5,500. So all of a sudden that big chunk is kicking in over here. But yeah, these are pre-earnings. They actually have earnings. Oh, earnings are coming up tomorrow for this one. So a bit of a late or perhaps an early bloomer, depending on how you look at the cycle here. So this is clearly a pre-earnings play. Though they're just looking to play earnings. Obviously, they probably go a little bit closer to the fire here. So they're going out a little bit. Give themselves about 37 days to play with this one. Let's look here at the chart. See what's been going on in our old foul Delta Airlines over the past year. A year ago, it was not that far from where it is right now. It's about 52.5, so about $2 and change north of where it is right now. Then it peaked, looks like back in late January. It's 60, 61, around that range. Actually got back there again. Well, then it dropped again to about 48 back in July. So it's been all over the place this year. And then it got close to 60, actually hit 60 again back in September. So it's kind of had a bit of a vacillation range out here. And then coming back on the dark side of that again right now at $50 again. So it's sold off again. So our friend here, perhaps assuming the pendulum is about to kick back into the upside, lifting or offer very close to that on nearly 7,000 of these Nove 52 halves. So obviously, for the folks listening there, actually it's 12,000 of these on the tape right now. So people are loving this strike out here. Obviously, we got to break through the 52 half strike for these bad boys to work, and to the tune of $1.15 to the upside. So getting up to the 53.65 range for these boys to make some cash. Mr. Rock Lobster, sir, this is kind of an old school odd block, buying some calls, and let's see how it works. What are your thoughts here on this pre-earnings Call-palooza here? 12,000 so far on the tape here in Delta Airlines, sir.
You think this is a oil bounce play, something like that? Like oil is not going to keep, because airlines don't like higher oil prices. I don't know. Pre-earnings for me, buying a lot of calls, kind of bold. Can we just say bold as a bold upside trade?
It is bold. I was going to say, if it's an oil bounce play, they're doing it wrong.
Well, I'm sorry, an oil
I see what you mean, though. Yeah.
And then it's going to pull back. So
yeah.
And then a
fade,
it's
perhaps. Yes.
Contrarian. Let's call it fade.
As the pros would call it, a fade. I don't know if you heard that lingo, Mr. Rock Lobster. But
it's been a while since I've been on a trading floor, so my brain is becoming addled. I can
tell because not every third word is a curse word, so you can tell you've been off the trading floor for some time. You've let that kind of environment bleed out of you. The same happens to me. You get civilized. once you get off those venues, civilization takes hold, and you start to say, "Wait a minute, this is how normal people act in a civilized society." All right.
I can't yell at that person.
Yes, I can't say to the horse with you to solve all my problems.
To the horse.
All right.
Nobody will get that inference.
No,
but it's a
they
good
won't.
one.
But it is a funny one. You and I are chuckling right now. All right, let's keep the chuckling going with a little bit of maybe a special Duke Live edition of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's do it. Let's answer some questions from afar, hither and yon, all sorts of questions. We kicked things off with a question of our own today. We asked you folks, say, hey, where do you think VIX is going to close out the week here? Are you buying this hype, or you think this is kind of just a near-term blip? Gave you 4 choices. So right about in this range, the 18 to 19.5 range, a little bit higher, so north of 19.5, a little bit lower, so in the 16 to kind of 18 range, or down further on that range, shy of 16. Before I reveal what our audience is thinking so far, let's go down to North Carolina. Mr. Uncle Mike, what are you and your crew there, what are they feeling?
Unanimously in the poll, everyone says it's going to be above 19.
Higher than 19.5. Wow. Okay, so they're buying. They're saying this is maybe a little bit of some vol here to stay then.
That's what everyone that answered the poll said plus 19 in this.
Wow. Interesting. Mr. Rock Lobster, you got a vote here. What are you feeling? Again, this is short term. This is just till Friday. So.
Yeah. Oh, definitely above. We're going to see 20. We don't get this close without seeing 20. So we'll be higher.
Think we'll close above 20 on Friday?
Yeah.
Wow, you're buying what this market's selling here, from at least for a near-term vol perspective. Our audience, let's see what our audience is thinking. Again, this kind of just went live. You got another day and change to make your voices heard. In the early voting, 32% saying coming in that big lower category, 16 to 17.99 to be precise. 32% coming in there. 26% going with you guys, saying higher, north of 19.5. And then a tie for third with lowest, shy of 16 with 21%, as well as right about here, 18 to 19.5 with 21%. So our audience kind of all over the place, kind of like the market is, which is, okay, that's what makes a market, right? All right, let's go. Actually, before I get to some audience questions, we got people chiming in live. Our old buddy Mark Brandt, I guess he sold some snap puts for 45-day puts for $1, and he's liking them, Mr. Rock Lobster. So there you go. People, I'm glad you're liking your premium harvesting out. We know a lot of you like to harvest yourself some premium. Glad you're enjoying it. If you're in the live chat, if you're saying to yourself, what the hell are they doing on a Wednesday? You got questions or comments, hit us up. Just like our friends at Duke do. Uncle Mike, have you had a chance to poll the room? They got any salient questions for us?
Oh, we have many salient questions, and we are ready for eagerly awaiting the answers whenever we are ready. You guys are ready.
All right, hit us up. What do you got?
All right, so the first question. Right now we're in a rising interest rate environment. So what is everybody looking at right now as a way to invest? And so is it, for example, what sectors? Maybe what are some ways with which to do some type of option strategies on the bond futures or something along those lines? What do we do right now in the rising interest rate environment?
Ooh, they wrote into the wrong show. They should tune into TWIFO tomorrow, where we get into all things commodities and futures options. But we can do a little bit of a spoiler alert ahead of time. By the way, Uncle Mike, we've been joking, speaking about rates and their impact on the environment. We've joked before, when is the Roe webinar going to come back? When are people going to want to start talking about Roe again? And we kind of joke that no one gave a crap. The market certainly gives a crap about rates right now. So I think maybe we've all collectively discounted Roe. What do you think, Mr. Rock Lobster? Because this is kind of the impact of Roe here. This is rates moving the market,
I mean, it is if you're long a lot of stock and put, you're not happy. I don't know if this is interest rates going up. It is affecting your cash balance and stuff like that, which is a different story, right? You actually can short stock and get money for it now. But as far as rates go, this is all headline scaredy cat stuff. So rates go up, and to be honest, rates went up in the 80s, rates went up in the 90s, didn't really matter. I think the the elephant in the room has always been, what does the Fed do with their balance sheet after all this QE crap, where they tried to micromanage everything and think they could fix everything by buying a lot of bonds and keeping interest rates low. There's always been, okay, what happens when this goes away? And like the Europeans are now, well, their kill QE thing has to go out the window. And when do these economies have to start paying real interest rates for money again? So that's always been a real worry. And politicians just sat there, and of course they don't do anything until they absolutely positively need to, when they're getting, shotguns are pointed at their head or something, which it's not there yet, but I think that's part of this worry. And so as far as what is a good investment in a rising interest rate environment, I think the best way to invest money has always been, you've got to be buying when other people are selling. We're still at near all-time highs, so I don't know if it's like a screaming buy, but, just good stocks that pay dividends that people are going to use. I would not stop doing that. And also like the big tech companies that seem to sort of grow outside of it, just all the better names that are going to start coming at discounts. I think that's still a good play, and companies that pay dividends still going to be okay. As of right now, I don't see any of that changing. The only thing that would make people freak out is like, oh, all of a sudden these governments own a lot of money and they're all of a sudden, how do we pay for that? So maybe they're really clever and can figure it out. I'm not sure yet. But I think this thing is part of this, the Chinese over the weekend saying they have to stimulate their economy when it's already one of the fastest, most growing dynamic economies, and they got a crap load of debt anyway. So at least now what you're looking at is you have this trade war thing. It's kind of been, the market freaked out about it, but then it didn't. Now the Chinese are going to dig in their heels a little bit. They're not rolling over on it. And they're going to just borrow their way to try to get around it. So, that just adds layers of uncertainty, more uncertainty, not less. And more uncertainty means more volatility. So, again, strap in, but just buy stuff that you want to hold for the long term. But, the market could easily go much lower, with no trouble at all. So, but our bonds are a great buy. If rates are going up, they're not necessarily a good buy. So there you go.
Yeah, hard to get on that train. I was giving you a hard time, Mr. Rocklapser, that you missed your chance, a screaming opportunity for your Roe webinar. You mocked it. And now, you've missed your window. Now Roe has already hit us all. Roe has slapped us all in the face. There's no time for a Roe webinar. The horse has left the barn, sir. You had your opportunity, and it is gone. But a lot of indicators you can look at for things like this. Obviously, are probably one of the lowest hanging fruit ones. One of the easiest for you guys to check on your own is, of course, the old SIBO 10-year Treasury VIX, of course, which is the TY VIX, which is hovering north of 4 right now, about 4.25. Not too long ago, it was about the point shy of that. So that's, of course, pricing in a little bit of juice in that space. I was only kind of half joking before, and I said, our show TWIFO is actually a great place for this. We don't get a chance to talk a lot of rates, but when we do, I have a lot of guys on there who are old school Euro dollar and other guys who spent time in those pits, which is kind of fun to hear those. And it's a little quick aside for you guys if you want to play along and maybe do some research. I'm not sure if you guys are interested in, of course, futures options. There's a great platform you can go to get some free analytics, courtesy of us and our friends over there at CME as well. It's cmegroup.com/TWIFO, TWIFO. That's, of course, the show we do with them, This Week in Futures Options. If you go there, you can check out a bunch of free analytics of this exact product you're talking about. So you want to look at Eurodollar, you want to look at, the 10-year or 30-year options, whatever the case may be, you can actually see what's trading out there, which I think is a huge boost if you're out there doing that. We can keep going on this, but Uncle Mike, if you have any other questions, we can get to some more really quickly.
Yeah, I got a couple others. The next one is, what are our thoughts on the FANG stocks as well as the retail sector, given the recent market movements that we've had?
Well, what can we say in short? They suck right now. This is a good time to be loading up on those bad boys. No, I'm just kidding. Yeah, they've been taking it on the chin. We talked about this for a while here on the show, that kind of FANG has been leading the dance in a lot of ways. Just look at the indexes today. NASDAQ taking it on the chin more than others, still off 2.3% out here in NASDAQ land. So, yeah, the FANGs have been an interesting one to watch. They've been leading the dance for the better and indeed for the worst out there. I mean, we talked before about building your own kind of baskets, and you can kind of easily do that yourself with some stocks and then writing the options on them. There are products out there, but we tend not to recommend a lot of individual products that allow you. There's S&P minus FANG or all these kind of fun things you could do. I don't know why you'd want that because the FANG make all the movement, but you could do that out there. So there's a lot of esoteric products out there, but we've been looking at a lot of FANG names. In fact, I would say that's a good chunk of our. I'm sorry. What was the second part of the question? It was about retail.
Yeah, just any thoughts on the retail sector now?
Too bad we don't have the meatball here, Mr. Rock Lobster, because he's Mr. Retail. He loves all things, ladies' clothing retail and a bunch of other things. Do you do any retail, Mr. Rock Lobster?
I don't do a lot of. I have to be honest with you. The last thing I looked at in retail was Best Buy, and I've been looking at Bed Bath & Beyond, and I can't decide if everybody hates it, and it's going to go out of business, or it's a purchase. So other than that, for retail. The whole retail thing is like it's a very weird area because of Amazon. Some retailers, like I own. Actually, I should rephrase. Walmart is my. I forgot for a second. So stuff that Amazon can crush is different, but something like Walmart, they have not. That is actually a competitor to Amazon. It's one of my biggest holdings, as is Costco, because Amazon will never do Costco. Never ever. It will never go away. I shouldn't say never, but probably not. It won't be Amazoned away because nobody's going to pay for the shipping for all the crap that they buy at Costco. It'll never work. And Walmart could actually be a competitor to Amazon, and because they have the footprint and the dollars and the space. So, and I think price-wise, you look at the cost of Amazon and the cost of Walmart. So, Walmart, personal favorite. I've bought that in the Walmart apocalypse about a year and a half ago. So I still like it. Still like Costco, although it's getting a little pricey to buy new stuff. But as far as regular retail that people can just buy online and, like a Macy's, it's like, I guess it's a real estate play. And then how much of this, big box real estate is going to be hanging around. So retail wise, I think that way. I mean, the reality is Amazon is what it is. But stuff that Amazon can't compete with. Walgreens is another one. I think people think Amazon that space is not as easy as everybody thinks. And Walgreens is your corner market. You go to the corner market, you buy something. Amazon can make a bunch of those, but is Amazon going to command the multiple they command now if they open a bunch of Walgreens? Right, they'll be competing with Walgreens. So I don't see how their multiple stays where it is if they become a retailer on your corner. When Walgreens kind of has that, they have that dial. They're very good at that. So stuff that Amazon can't do, I like. Things that Amazon I can do, I'm like, So any retail with service that actually has a service business attached to the retail, because people don't like doing things anymore for themselves. They just rather farm it out. Amazon can't do that very well. At least they haven't started doing that yet. So those are the areas I like for retail. Everything else, I could care less about.
Ironically, I just passed the Walgreens in around downtown Chicago that had closed and became a Halloween store. So how strange was that? That kind of caught my eye. So you don't really see a Walgreens closing too often. So maybe that's the exception that proves your rule there, Mr. Rocklow. So you mentioned Bed Bath & Beyond as well. That's a good one. We were just talking about that on the show here. But a week and back on the 27th, so a little over a week ago here on the show. We were talking about, Bed Bath & Beyond. They made some headlines recently. They're dialing back those crazy coupons they were sending to everybody in the mail every single week, saying save 20%. Go figure. People kind of just got baked into the pricing over there. So that's been a big change for them. But you're right. People are still kind of circling that name, kind of wondering what's going on. At the time, we were talking back on the 27th about the 12 half puts in January. Paper was lighting those up to the tune of 17,000. They were late print through the offer. Paper was loading up on those. That was clearly opening because there was no OI to speak of. Total, I think, of about 20,000 actually traded that day, 21,000 and change. And then another 10,000 went up. So that week was 65 cents. Another 10,000 traded about a week. Not even, about a week later for about 75 cents in that range. So they've been piling into that 12 half strike out there in Jan on the put side. Over 30,000 open on that strike now. That's about $1 and change out of the money here, listeners, if you're not following Bed Bath & Beyond. So it seems like some folks out there got a little bit of a case of the nerves for Best Buy out there as well. This looks like probably a size underlying holder, probably loading up on a little bit of downside protection, but clearly the skittishness has not gone away, at least in some of these big names like Bed Bath & Beyond. Uncle Mike, let's be charitable. We'll stay a little late for your folks. We'll do one more here. What do you got?
All right, can you tell us a little bit about the history of the VIX and how it affects markets today?
Oh, history of the VIX. It's funny. I think if you had asked anybody, and I was out in the S&P in the mid to late 90s into the early 2000s. Mr. Rocklobster was out there, I think, in 1952. Is that correct?
I think 1953, actually.
Yes, 1950. I missed it by a year. But yeah, when I was still out there, the VIX was a couple of different things. First off, it was pretty much OEX, not SPX, so the S&P 100, and it was pretty much front month at the money, and that was it. So VIX was a very obscure thing. It was the front month at the money volatility of the S&P 100. Does that thing sound like anything that's going to resonate with anyone? No, it didn't. The only thing that caught people was someone along the way came up with this really catchy moniker of the fear gauge. So the media liked to quote the fear gauge, even though they really had no idea what the hell the OEX was or what that number even really meant. What does the front month at the money OEX vol really mean to anybody? And SIBO, to their credit, kind of realized that. And in the early 2000s, they kind of went back and did a little bit of rejiggering. They said, first off, people actually follow the S&P, not the S&P 500, not the 100. So let's switch it to an index people actually follow. So that was their first genius move. And then the second move was they kind of spread it out. Now, this is the part that's getting them into a little bit of trouble right now, which is kind of interesting. Because at the time, I thought it was there were pros and cons to this change. I thought it was kind of interesting. They spread out the calculation to include the wings as well. It's not just the at the money, but also the call wing and the put wing, all different strips of puts. They go down to where there's essentially no more bid in the puts. So that allowed them, because there is information. It's not just all about at the money. There's things called SKU, and they were attempting to figure that in with this new version of the VIX. They've since have added more iterations to it. They've added some of the weekly products into that calculation. So it's a little bit more of a free-flowing type index than it used to be, an attempt to make it more readily trackable. But if some of that change, if you've seen some of the headlines, is now coming back to bite them. And they were getting notified. People like me were saying, well, a long time ago, I was on panels actually with our buddy, Mr. Schwartz, the Schwartzatron, over about a decade ago, talking about this very subject, how people were using some out-of-the-money puts to really do what's called carpet bomb in the SPX, to put bids in strikes that really have no business having a bid in order to game that calculation a little bit. SIBO pushed back on that, and now they kind of were very resistant to any sort of change on that front. And now they have a bunch of lawsuits coming their way. So it's kind of been a little bit of push. The funny thing is, I still think there's value there. And maybe Mr. Rocklobster, maybe you have a different opinion. I'd be curious to hear it. But I still think there's value in looking at that SKU. Others like Scott Nation say no. His product is straight up at the money again. He says just look at the money. So there's definitely room for a difference of opinion. I think there's value in the SKU. I think you have to just be careful with the way you do it. Some of the changes they've made now I think are actually valuable, like bringing a little bit more transparency, giving people alerts saying, hey, guess what? There's an imbalance coming. Maybe you want to pay attention to this. Things they probably should have done about 5 or 10 years ago maybe, but they're doing it now. A little bit late, better late than never. I don't know if the lawyers see it that way, but a little bit more transparency to this, and maybe if they can find a way to deal with that little issue, sir, on that special opening quotation, it seems like it would be a good. I don't know. Are you on the SKU train? You think there's value there, or you want to go back to straight up at the money, Mr. Rocklobster?
Well, obviously Scott Nations, he has a product he wants to sell, right? So he's like, oh, at the money. So
no, he has no dog in that fight. That is pure market altruism, sir.
Yeah, exactly. Not that I don't think he has a cool product, but I don't know how you trade SPX without thinking about SKU, because it's such a major component of how the VIX prices and everything else. So yes, I think it has to stay in there. If I think they can improve the way people game the close, but the reality is, if you still have a bunch of VIX positions into the settle, all that stuff is disclosed in all their VIX literature, and it's like buyer beware. You want to carry a position into the close or into the settlement, which could be anywhere, right? The SPX could be up or down 30 or 40 handles. Nobody knows overnight. So you're carrying extreme market risk anyway. So if I personally, obviously, since I was a trader and I was on the jury, I would say this is all bullshit because, whoops, watch the dookies. I'm sorry, I just cursed. There I go. I had to come right back into I had to get right back into my old mode. But you have extreme market risk anyway. Are people probably putting bids in there? Yeah, but if they're putting a bid in, make somebody sell it. So the question is, can you manipulate the index for $10? Can you put, $50 worth of bids in for some puts and manipulate the settlement? And I think the SIBO's trying to address that. They're trying to fix it. So I think that might be a little bit too touchy, but I'm using a little hyperbole to get the idea across. But I think you absolutely have to have skew in it, because it really that's what part of the product is. That's what part of volatility is. And if you don't, how do you take a major component out? And just it's like Batman without Robin.
Yeah, I welcome this change, and I've been hoping for a little bit more transparency and maybe a few tweaks so they could keep the skew in. I'm with you. I think that there's added value. By the way, I think all of us here concur that some of you guys may have read some of these recent releases from the lawyers and other things and all these press about the lawsuits and making some very histrionic, hyperbolic claims about VIX, that the executives were in on quote unquote rigging this thing, and that this thing could be rigged after hour, all these other times when there's no real trading going on, that these quote unquote whistleblowers said they could just move VIX willy nilly. I think a lot of those are a little bit, I think, shall we say, out there. Not a lot of meat on those bones. But the fact that there needs to be more transparency and they need to do a better job of getting that out there and dealing with these imbalances, I think makes sense. But hopefully they find a way to keep the skew in there, because I'm with Mr. Rocklopster. I think this is a valuable tool for, I don't want to just know, at the money is good if you want to just do a straddle run to get a kind of sense of the term structure. But if you want to see what's going up and you want to see how things are trading, you got to have the skew in there. And so I hope they keep it. Meanwhile, speaking of keeping things, we're keeping you guys long. Let's keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's toss it over to Uncle Mike first. This is, of course, a segment where we tell you what we're watching on our trading screens. Unfortunately, since we're doing it on Wednesday, listeners, we won't be joining you again tomorrow on Thursday. We will be doing TWIFO, though, so stay tuned for all of you listening there who into your futures options, including whoever asked us that question down in Duke. I got a feeling we'll be getting into some rates-heavy stuff this week, so stay tuned for that. But Uncle Mike, sir, what's on your radar for the rest of the week here until we gather together back on Monday?
I just want to see if this pullback continues. I want to see if we can start to flatten out a little bit to see if this is indeed potentially a buying opportunity. I was speaking with a client a couple of weeks ago, actually, in terms of looking at the market if it does have a pullback. What would be the levels that I would start looking at? I said in the low 280s on SPYs, so going to be looking at that to see if this levels out a little bit. I don't necessarily want to try and catch a falling knife, but I took deltas off the table quite a bit a couple of weeks ago, and, looking to see if it's time to get back in. And of course, watching someone's Twitter account to see if he tweets anything in the next few days. You never know.
I had no idea you were so glued to our Twitter, Uncle Mike. We'll try to keep it PG for you so you don't get scared over there. All right, Mr. Rocklopster, same question for you, sir. Obviously, everyone's kind of got their eyes glued to the old vol space now that we're in zone 73. Can we make it to zone 85, or will we go back down to zone 50? What do you think, sir?
I'm just shooting the breeze with some of the guys in our pro chat room, and probably one of our best traders is like, yep, I think vol's going to be higher. So he's got a good nose for this stuff. Yeah, I think we'll be higher. I think we'll be in zone, what are we? We'll be out. We could, not sure about zone 4, which is, for me, over 23 vol for VIX. But I think we'll break 20 by the end of this week. And until this China interest rate somebody starts to, let's call it, circle the boats a little more and come up with solutions to this impasse that we're having with China. Everybody's kind of digging in. That's how things get that's how things can get worse, because there's really no solutions. It's like, remember the Europeans in 2012? Oh, the Greeks are going to leave, and the Greeks don't want to do this, and they fight it out, and they keep pounding each other in the head for months and months and months. And, volatility goes crazy, and nobody knows what's going to happen. The macro problems that, where's Alex when we need him, the man with the hat? But those are the things that really drive vol quickly. Governments are the only things that can make big mistakes when it comes to the market. Companies make small mistakes by themselves, but the governments can really blow it, and that jacks volatility up. So until some government stops blowing it or comes up with a better solution, we're going to have higher vol. So there we go.
There you go. You heard it here first, or perhaps second or third. But yeah, a little bit of maybe a little bit of vol here to stay. I was fading it in my crystal ball prediction. We'll see how that comes to pass on Friday. If a good chunk of you, and indeed the Rock Lobster and our folks over there at Duke, are correct, then perhaps my prediction will be a little bit pessimistic. We shall see. In the meantime, though, that music means we have overstayed our welcome. We've got to go. But before we go, let me go back around the horn and see what everybody's got cooking. First, before I even do that, let me thank our friends over there at the Duke Fuqua School of Business. You were a great crowd. Give yourselves a pat on the back. Yeah! And before we go, Mr. Uncle Mike, we'll start with you. How's the rest of your road trip looking? Is this the beginning of your great tour of academia? And if people want to learn more about what you're doing, where should they go? What should they do, sir?
Well, by all means, for anyone that is in the Raleigh-Durham area tonight, there will be a presentation open to the public here at the Fuqua School of Business. Stop on by. If you want to sign up for it in advance, we do have some seats available from what it looks like with the sign up, but if you do still want to sign up just to be safe, go to my Facebook page under the events section at St. Charles Wealth Management. Coming in the near term, we will have some local events coming. I'll update you more on that as the time comes, but in the meantime, if you do want to work with a financial advisor who's not afraid to discuss in detail the effects of row on option volatility, feel free to contact me. Go to my website, www.stcharleswealth.com, or give me a call. Reach out in any possible way.
That could be the name of a new webinar, Row. It just snuck up and put a knife in our backs. So Row, it just slapped us all in the face. That might be a good way to get people excited about a good Row webinar. What do you think, Mr. Rock Lobster? Is it time for the Row webinar?
Yeah, I'm sure we'll sell 2 copies of it.
If you call it Row, it slapped us all in the face. You'll sell at least 5.
Yeah. What do we have coming up? If you want to learn about weekly volatility, Saturday class next week might be really appropriate. Next Saturday, obviously my vol newsletter. If you want to learn how to trade vol, you just subscribe to it and learn. Also, Option Pit will have a good deal on our gold class if you really want to learn how to trade options. And that's about it. And also our funds, interested in volatility protected funds, come to us. We just opened them a year ago, so they seem to be working out. So what the heck?
What the heck, indeed. Check them out, optionpit.com or Carmen Line Capital if you want to learn more on that end of the space. And on behalf of myself and the Rock Lobster and Uncle Mike on his tour of academia and all of our friends down there in Duke and everyone out there in the hinterlands downloading, streaming, and subscribing and listening live, we love you all. We're not going to be on tomorrow, but we'll be back next Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.